All right, let's jump into things. 9:58 on 29th of May. So look, I'll start off with the news and data. Data front and that overnight, we had the sort of Fed minutes coming out. I guess that probably would have been maybe the headline bit of data for the evening. But with the Fed minutes and that, we've pretty much sort of there's so many Fed talkers sort of coming out every couple of days that it's not really sort of like big shocker kind of sort of news, but I think it's sort of lent a little bit more in the sort of the hawkish kind of side of stuff. And the market, just having a quick sort of look at the timelines with it all, didn't really seem to react a great deal to it. So obviously I'll get to the charts to emphasize it a bit in a moment, but yeah, it wasn't really anything sort of spectacular. And apart from that, we have Richmond Manufacturing Index came in as expected, slightly better than previous, but no sort of shock on that. And again, wasn't anything sort of super spectacular in terms of the actual market reaction. Just having a quick look at the moment. Yeah, so probably, if anything, probably a little bit of a bearish kind of move on DXY with that sort of move there. But again, it wasn't anything sort of you didn't break major levels with it. It just corrected a little bit. But yeah, as I said, obviously I'll get to that with the charts in a moment. This morning we had RBNZ speaker as well, and from what I've just sort of glanced over the headlines and that, they're sort of saying that they're probably sort of done with their cuts for now. And as sort of covered it yesterday, their sort of cuts have come down drastically. I think they were sort of sitting around just managing a position. They were sitting around 5.5%, which is, I think, probably as high as it probably got with most people. I think maybe the US are probably up around that as well. But they have just gone on a heavy, heavy cutting cycle. And of course, coming from Australia, where it's sort of like so hard to get the RBA to move to do anything in either direction. They're very much a wait and see attitude, the RBA. But the RBNZ have just been raising it right up, cutting it right down. And I actually been looking into sort of like the property side of things over there as well. And there's actually seemed to be a bit of a sort of decline in the housing market over there. So certainly something to sort of keep an eye on because, that's the whole sort of point. Well, not the whole point, but one of the stronger points of these sort of cutting things is to sort of stimulate economy. And I know the housing isn't a true representation, certainly isn't with Australia of the strength of the economy, but that's where people would be pumping their money into. And obviously, if they're not doing that, well, it's a sign of maybe some underlying things over there. So it's worth keeping an eye on. As for sort of through today, not a real great deal of data coming out. Nothing of sort of major note. Sort of moving through here, consumer confidence in Japan, a couple of bank holidays tonight. Euro session tonight here. So bank holiday over in Euro. So Euro session. I've been trying to sort of calm down a little bit on Euro session. It's just been more often than not, it's just a little bit of a slow sort of time. So it's good to sort of try and balance things out a little bit more. But then moving into US session. So we've got GDP quarter on quarter numbers and where we are preliminary sort of quarter on quarter numbers. Looking to just remain sort of fairly flat, well, very flat, of course, exactly the same, but in a slow down sort of moment. So DXY is right on the front foot at the moment. We've actually had a fairly decent, over 0.5% gap up this morning. And that's probably the main thing that, so just in the end of rest of the sort of data, not a great deal there. So we just had a headline out this morning where the administration basically, or no, not the administration, the court has paused. Let me see if I can find this actually just to get it correct. So, federal court blocked Trump's Liberation Day tariffs from going into effect. Like, this whole situation is like just beyond a sort of joke. Like, kind of he can do whatever he wants, but then it gets blocked and then it sort of goes forward and some goes forward, some doesn't get. Look, I haven't sort of fully looked in this to fully dissect it, but the way the market has reacted with this, gold down sort of $30. As I said, DXY jumped up 50%, 50%, 0.5%. Aussie took a little bit of a bath off that. Seems to be recovering there a little bit. So, it's certainly something that's impacting the market a little bit here. So we have gold, bang, came down, clipped our targets, 32.50 that I mentioned yesterday. So this was obviously a strong area where the buyers would have liked to have held kind of thing. And you can see it was obviously sort of melting back down into it. Nice little structural retest of these things. I would have started off with DXY, but we're on gold here, so may as well go through it. And you can see this beautiful structure setting up here because this is the levels that we can see it's support, support, support. So what's it going to do as it comes back up? Well, that's going to be the time that people go, okay, yep, bang, I'm out. This is the sellers. Now it's becoming resistance. So that puts, again, the emphasis back on these lows. Like, so again, same sort of structure we find every time. We come down, we find support, up, find resistance. Resistance at previous support levels. Come down, we tackle the lows at the 80 level. This is 80 because we know it is from back here. We've already sort of identified it, and then it's come through, bang, and cycle starts again. So what to expect from here now? So basically, really, you could almost kind of look for a potential repeat of this cycle. This being this first leg down, a retest up, and then sort of push back down. And the fact that this has held a couple of times, like this 3280 level, I've mentioned a few times on the way going up here. We already had called it out. We've seen that it's been an area that the market's sort of like been reacting to it. And so basically this is the support. This was the line that it needed to hold, give or take a buck or two. Obviously, the first test back into it, not going to do it. Comes up, grabs some more power, and then comes back down and breaks through. And this is what I say about these sort of things. When they're breaking, first time back to a main level, generally you're not going to break it through the first time. Like that's the thing. You come back, bang. People use it as targets. People use it as we bought it here previously. Let's buy it here again. That will be an area where, and we got the reaction, and this is what we expected to see. We saw these lower levels play their part earlier in the session. They got a little bit of a push down, powered through, high level of this structure, and bang, we've moved down here. So this has been a great trade. Like this whole week really sort of, if you look at the sort of weekend analysis, we were closing up near these highs. It was puncturing up here. We had this beautiful sort of confluence of the 78% of this big drop down. We had this horizontal plus this major sort of falling resistance coming through here, and three segments of the market saying, hey, look, this is good enough to sell it from. Well, we can see that, since that move there, gold has dropped 3.5%. 115 bucks. And this is the whole sort of point with these things. It's sort of like, while we're sort of calling these levels and attacking these next levels, I'm not an investor. I don't care to be an investor. I'm a trader. And this is why we have these small targets. If you look at Monday or Sunday, we don't do the Monday video. So Sunday's video, Tuesday's video, the post I put on X, you have these little targets because this is where we expect the market to react. And it does. And then sellers were here, sellers are here. It reacts here again. So instead of trying to sort of trade these Hail Mary trades and go from here to here, I mean, that's great. It's 3.5% had you caught the very top and had you got out of the bottom. But that's incredibly difficult to do. The idea that you're going to call a very, very top and execute and actually hold all the way through, it's very tough to do. But for me, I'm in, out, in, out, in, out, in, out. And this is why sort of people... It's funny, I had somebody a while ago sort of say, how many trades a week do you take? Thinking that it's going to be like 1 or 2 or 4 or something like this. This is what the textbook says. I can't remember, 40, 50, 60, I don't know. Like, a lot. But the point is, I don't go all in, all out, and I don't look for the one position here, one position here. I'll pepper my entries, and I'll take partials along the way. So yeah, it's kind of, you could call this as one trade, short gold this week. Like it was long gold above 32.70, up to 33.70 or 64, whatever it got to, 65 or whatever it got to there. Like, you know what I mean? That's one trade, that's one trade. But, in the actual sort of execution of it, well, I don't know, 15 trades, something like this. Anyway, back to what we can actually use from here. So as we can see, the sort of structures sort of come down. We've broken through. That's great. There's a market's calling that 3250. Look, it's a psychological number. It's a decent sort of area. It's nothing sort of direct along here to sort of have this as a support. Like there's no sort of structural level there. So because there's no structural level and it's kind of just bang hanging in a little bit of no man's land. I think this could really just settle a little bit. As I said, it's a good target. It's a target I called as well. if you have a look at yesterday's video, I don't think this is going to be a bottom for it. Like that's the thing. Excuse me. I don't think we're necessarily just going to come here and then okay, bang, we're back up over here. Um, the headlines that came out before, look, I don't think they're going to be the thing that sort of brings gold back down to 3,000, but it's part of the equation. And this is the thing, it's sort of like, you got to think, what are the drivers? What's been moving it? Well, gold's been moving on, tariff stuff and tariffs moving up, and hey, it's all drama with the tariffs. Well, now when you get these kind of headlines and these things get slightly abated, well, that actually takes a little bit of that steam out of it. And we start to sort of see things go, okay, well, hold on, wait, maybe we don't need to execute so much on that. Now, if it's written into law and it's not happening, gold will be down here. It's not. But the speculation of the market, given the latest bit of data, is that it is being paused and blocked, and whichever haven't, the driver is just not there like it was before, and so we see the markets react for it. So what we can look at now is take these lows and these highs. Put this up here. So we're just in between the 38 and the 50 here. So if we're moving up, so if you're looking to buy this thing and you're like, oh, yep, yeah, okay, this is just a little bit of a step back, despite the fact that we've got this kind of larger structure moving down here, I would say you're probably still looking down around these levels here. I don't see structurally a reason for this thing to hold here. If we wanted to sort of call it, this is almost a bit of a head and shoulders at this area here. And obviously we're down through the neckline now. So if this were to be the head and shoulders, we look for the measure move. Measure move obviously from your neckline up to your head. There's not really too much wick to take into account. So we sort of drag this one down here and we pull this off the bottom here. And as you see, this lines up pretty well with the previous area that we've already got isolated. And this is the point. You got to build these charts out and you got to sort of say, look, okay, it's not just going, okay, yeah, it's going down. Okay, that's fine. We're going to take profit. We're going to start to, if you want to get long, get long. Well, for me, I say that this is quite a crucial level for it to hold. I've been saying this. There's 32.80. It's broken this now. So what you do, well, what I'm going to do with this is then I'm going to be selling rips from this move till, we get back and sort of reclaim 32.80. If you reclaim, and by reclaim, I mean get above, push back down, buyers hold that level and then push it back up, fine. You can look up at these levels here. But as it is now, we've got a head and shoulders, we've broken the neckline, it's sitting in no man's land. Measured move gives you 3,200, bigger round number, previous area of support. There's a lot of things in my mind that say, hey, you know what? This move could be undone. And look, all it does is really just undo this big explosive move that we had. And once we get down here, we clear the books and we say, okay, what's happening? What's the data looking like? What are the headlines looking like? What's DXY looking like? Because all these things, this is the point of the analysis. It's not just, looking at a chart for 2 seconds and going, okay, yep, this thing's, going up or it's going down, whatever. You got to have some sort of reasoning and basis for it. Anyway, look, that's my sort of position on this at the moment. I think we probably down towards sort of 32. So I think sort of any sort of move up over here, I think will just be sold into, particularly if we do get a retest of this 32.80s level. This could almost have been, this on the 4 hour, if you have a look at this could almost be your break and your retest through here though. So, I think sort of a continuation just moves down underneath 32.48 and we move down. But I would say we've probably got about another $50 or so, $60 to move to the downside here. And let's just put a little price. I haven't used the price targets for a while, but just to emphasize the point. That's where I'll be looking for, if I can find it. Might help. It's in alphabetical order. All right, cool. So that's gold. Moving on to DXY. This is a big kind of move here, and two things to take away from this. There's a large gap here, We do actually have a smaller gap up around at this 190. But look, these sort of things, they're coming in at the right time. We had a larger kind of, I wasn't a big fan of this channel, but it did sort of play its part last night. Obviously sold back down. So as you can see, it's kind of really sort of moving up and sort of breaking and put like these headlines, whether they're sort of going to be the thing that changes the game or not, they are the things that are the market's reacting to. We're seeing sort of like, the US dollar was beaten down. What was one of the biggest drivers as to why it was being beaten down? Because economic data has been weak, but, not comparatively to all its peers, it hasn't been that weak. It's actually probably been stronger than some of them. Yet US dollar has still been smashed against every currency. And you think, okay, so if it's not economic data, what is it? Well, maybe it's the tariffs and the sort of the fear of all this sort of stuff. And then they say, hold on, wait, maybe the tariffs are going to be blocked for a little bit. So what does the market do? It takes off some of that pressure. And this is just this reaction here. Look at what it's been doing the days prior to this. It's already been sort of moving up, moving up, moving up. And these pullbacks, this one's a bit deeper because we undid yesterday's move up there, but it came off a resistance, but managed to go through, closed and sort of consolidating near the highs. It's broken through, back above 100. There's a lot of things that is saying that, look, this thing is almost setting up and can be ready for a larger squeeze. And remember, this is where's the actual other chart? This one here. Oops, no, this one here. Flag on it. No, that's not it. Too many charts. This one. And this is the call. I mean, this is a call from down here that we would see this Elliott wave, ABC sort of thing, that we would see this move back up. But you could see where the calls were made from back down over here to pull back down here. If you look at sort of the video that I did on the weekend, the analysis, the high heel bottom, like this is one of the greatest bottoms you can see. It's these dribble up, fast down, fast back up. If we close the week above 100.2, and even better above 102. If you close above 102, well, you would not want to be sort of short US dollar, put it that way. But I would say even to close above 100.2 to break this little zone down here, I'd say we're going higher. And, if you get above 102, you look realistically, they're going to take it, I would say, to over 104, at least up to sort of test these levels over here. If they don't sort of want to play sort of a cheeky game and just take people out and then knock back down, structurally, you've got targets up around 104, 105. And you sort of think like, economic data's not too bad. It's not sort of, I mean, it's not pumping. It's not like, okay, wow, economic powerhouse kind of thing of it all. But it's not too bad comparatively, and that's what DXY is. It's a sort of comparison against all those large currencies. Um, and Sorry, I kind of lost my train of thought there. And structurally, if you take, sorry, did lose my sort of train of thought. If you get rid of the tariffs, which were the sort of thing, the big thing that's been hammering and hammering and hammering it down, and been the sort of the handbrake that's been on DXY. Well, you know what? You're opening up, and you can definitely see some move further back up. I mean, look, even 102.50 is only 38%. It has been bashed down here. 50% back up at 104. The 61% lines up pretty well with this horizontal, hence the sort of the larger shot up over here. So again, look, these are the kind of things that I've sort of been looking for and planning for. And this little high heel bottoms are very good at reversals. So should this thing find some, some data, some headlines to sort of back up the move, and we see these positions get alleviated out here, well, you could see this thing carry on for the next couple of weeks, in my opinion. But of course, step by step, got to get up over the top over there. If we look at what we're doing with sort of today's session, leaving gaps is never a great idea. But again, we've seen some gaps that have sort of stayed open for quite some time. Not including, I mean, this has been open, what's this? That's like 10 days or something. And it's certainly a small little gap. We did have a gap way, way, way back. This is going back in time. It wasn't, maybe even last, no, it must have been last pump. Couldn't have been that long ago. May have been one of these ones. Anyway, I can't be bothered sort of scoping through it to find that. We did have a gap that was stayed open a long time. So these things can happen. Generally, they close sooner rather than later. 9 out of 10 times they'll close sooner rather than later. This is quite a big gap here. And the way that sort of we're playing this at the moment is because sort of like, it is pushing up through these levels. So we've got to think the corresponding things, there are going to be stops around these levels. Once they get triggered and once they get hit, it doesn't really matter whether the headlines are legitimate or not. It's going to run out that move and it's going to go and sort of hit some more stops. So look, if this thing moves up higher, certainly there's still work to be done. We've got a lot of chop and sort of areas coming through here, a lot of areas we can sort of be targeting. 100.8. We've got a little bit of a resistance through here. But again, look, because it was so choppy all over here, it's a bit hard to pick out where we might be targeting. Jump onto the 4 hour. Look, I would say up around this 101 is probably your next sort of target to get above. It's just choppy around here, so you look for the higher sort of structural sort of level. And I would say, yeah, probably around that 101 is probably where you sort of be looking for a top side move. I don't think this is necessarily the moment that this is just going to, come up here to 102. But as I did say, look, you within a whisker. Again, you can see there was a little bit of resistance here in the 4 hour as well. If this closes up above 100.2, so up in this area over here, I think that's your move. That's how I'm sort of playing it. Now, the counter, because you've got to obviously sort of consider both sides of it all, is that this thing just fizzles out. Comes up over here. We've got some reason that it could be sort of finding some resistance between 100.8 and 101, the sort of 20-point area over here, and market could sell this thing back down. Again, look, overall, it's still in a fairly bearish kind of structure, although it's kind of more ranging now with a significant higher low down here. But you got to sort of think you need the actual sort of data and that to sort of back it up, and you need continued delays in these tariffs. I think that's the big thing to sort of keep an eye on. If we see a sort of continuation of that, then I think the market's going to be happy to sort of see where US dollar can move up because all these things, there's so much profit in them. Euros are at the highs, but pound is the sterling's been absolutely ripping. Gold, of course, we know has just been high for ages. And I think sort of like, if they look for sort of a bit of a value play, I think down here where it's sort of like a multi-year lows, it provides a potential sort of opportunity, even if it is just for a month or two, excuse me, to run it up over here. I think there's definitely some money that can be made here. And, particularly at the moment, as you can see, that this is a bit more of a significant higher low through here. Be something that is setting up. Anyway, we'll see how we go. Look, a flip above this gap open, so above here. Let's just put a little alert for the flip. That's a chance for moving up. And then I would say, as I said, 180 to 101, I think is probably a reasonable area should you get a flip of this here. If it does come back down, maybe tries to close the gap early. It's a fairly big gap, so we'll see how it goes. Depends what sort of comes out. As you saw, there's not a great deal of data coming out here. Actually, what do we have tonight? We had the GDP numbers. Nothing really sort of spectacular that could be used as a catalyst in that sort of sense. So we'll see how we go, but I think any sort of move back down to 100, 100.4 over here, I think this will be bought up, and then I'm targeting 101. All right, move along. We got Aussie, and Aussie sort of really crushed down. So we're moving towards this third target here. So again, same with gold and that this is why you have these small targets down the way, just because we've seen Aussie turn on a dime. It's coming down, and then bang, moves right back up. You don't want to be caught on the wrong side of the thing as it runs up another 100 and something points. It's teased so many times up above 65, but as per the weekend videos as well, how many times can it get up above 65 and then be slapped down before they don't think, okay, let's just test what's out over here. Because I do believe there's going to be a lot of stops over here. And this is what I'm sort of saying, that sort of if we do see DXY, which is, I know Aussie's not part of DXY, but as a broad sense of the market starts buying US dollar because it sees some value, that's going to be pushing it down. We're seeing the yuan about to attempt to move up, plus we've got a dovish RBA that's looking to cut a couple more times this year. That is the sort of setup that you're looking for a move down in Aussie. So, we came back down, we tested this, I guess what would be the swing low of this after a failed breakout attempt of this triangle. This was a little support that we found just prior to the headlines on Friday, where there was the 50% tariffs from Trump for the EU. It came down here, it's tested it again on the headlines down here, though the market's not prepared to sort of take it much lower as of now. So again, look, what you're kind of looking for here, or what I'm looking for, is underneath 63.90s to sort of really open this thing up a little bit more. We're kind of down, as I said, what would be the swing high. We've undone this whole move here. And this is the thing, exactly that headline that came up there. It would have been nice to be shorting, all from up here, but I sort of layered a couple. Oh, Jesus. Layered a couple on the way through, but we're seeing this thing start to play out quite well now. All right. Fine, back. So look, I think sort of, underneath 64, 63.90, that's really the area you want to sort of target. Should they find it is a bit overbought, this on the 4 hour, that's two touches down into the zone, and the market's happy to sort of either take profits or sort of like buy it back up. So I think you've got to sort of see what the market's going to do with this US dollar move, because the further it sort of moves, well, I mean, it's pretty straightforward in that the further it moves up towards our target, the higher likelihood that we come down and test these levels. And as I said, the main thing is to get down and pop and sort of probe down here. See if there's a bunch of stops. Because a lot of this move down, albeit it has been sort of a fairly decent little move in parts, it is kind of still doing what it more or less has been doing the whole way, which is just grinding. It's up and down, up and down, up and down. There's none of this kind of straight move, easy trend kind of sort of stuff. This has just been just an absolute chop fest through here. And so till you clear either side of this thing, and that's why I'm sure a lot of people sort of got long on this and I'm wondering why the hell is Aussie not running? Um, because I've traded Aussie a lot, and I've traded Aussie a lot long, and I've traded Aussie a lot long wrong, incorrectly. And because of these sort of moves here, comes back, yep, you try to add for a long, bang, it should be bouncing, and it doesn't. Should be bouncing, and it doesn't, and continual failures to the downside. So I've seen it happen a long time. So hopefully now I can, sort of time these things a little bit better. But I do think that US dollar does have potential to sort of maybe move through these highs, as I said. Though as it does try to sort of close the gap, you're going to see this little balance with Aussie here. I think if you can get back, look, there's quite a few little levels through here, but minimum you'd want to be getting back above, 64.50, 64.60. I think above there, maybe you could think it, but like I said yesterday, I think any sort of move up here is just going to run into a bit of a confluence and be sold down into. So again, look, I'm not even looking for buys on this at this stage. It is a fairly extended move because we have undone this big one over here. So shorts do make a little bit of a difficult call from this current point. But I think any sort of move up into, this sort of 64.50, 64.60 will be a sort of sell opportunity in which you can kind of sort of get on the short side and then really sort of move down to, again, be targeting 63.90. And then underneath that, 63.50. But really the big one is the 63.20, which we've been sort of waiting for a while for this thing to potentially come across and test. All right, let's tick along. We've got silver, and silver continues to reject from here. As you see, this is 1, 2, 3, 4 times it's been respecting this line. So drag this out because, realistically, this line coming through here is going to be a big go line should it decide to push up and go through the top side of it. market's obviously looking at it. There's a reacted the more the market reacts to a line, the more sort of you can tell that look, it's going to have significant impact once it does break. Slight example through here, four kind of touches here. Well, actually sort of went through this one here, but rejected from that zone. But obviously, breakthrough was a support on the top side, reacted from it again. Look, silver, I've been on the sideline. I trade the short side a couple of times through here, um, but it just inability to sort of break down, and I got out, which is proved to be the correct move because obviously we've been back up into these higher time frame resistance areas. But more or less, it is really just still grinding. So I do think this will be the area to play with. Should you get up here? Whoops, like that. But as I said, I do think we've probably got a little bit more downside to come back into this chop area at least. I think sort of, maybe around sort of 32.30s. If you want to sort of get long, this could be potentially something to sort of go about. At the moment, I'm just, given everything with US dollar potentially moving a bit higher, gold potentially coming off, I think the metals might be as a whole whacked a little bit as well. So I'm not, again, I'm just kind of steering clear of silver. It's just too much of a headache. I've got enough of a headache trying to sort of balance Aussie positions. Copper. So this one we've sort of seen it yet again. Look, he's come back down, and this has become your resistance again. So that little bear flag that we sort of called out, well, I called out yesterday, that played out pretty much to a T. Only small, but yeah, look, again, you're working with what you got. Market saw it and they ran it straight back up. And this is the thing that I say that's sort of like the difference with investing and trading and that. It's great. If you have your stop here and you got a super wide stops and you're doing this kind of thing, that's great. If you trade this little structure setup like I called yesterday and you put your stop above the high, well, you just got taken out and then the move continued along without you. So you got to have either wide stops, small positions and that, or go for the in and out trades. But anyway, as we see, it's back down into the zone over here. This is pretty much classed as a failed breakout attempt. You can see the sellers have stepped back in. They've reclaimed 479. I would say you could probably see this thing drifting back down, test down the bottom side of this now. Oops, it keeps moving. I wouldn't be surprised, move towards sort of 4.6. I don't see this necessarily turning on a dime and moving back up over here. And finally, just with China, we are seeing this thing breaking out. So yesterday I called out this sort of falling resistance. Now this is one that again makes me sort of caution Aussie and also gold because they both sort of like to move with this stuff. Moving through now this falling resistance, we had a negative divergence. We had a 3 drive to the lows. We're now through the falling resistance. This thing's on warning. So the first target is this area just here. A breakthrough here, I'm looking for a squeeze up to 7 to 8. And with the weaker one, we're going to see pressure onto Aussie. We've got this nice negative divergence with the chart here. It's going to put pressure on gold as well. And this is what I called yesterday, and this is why I've been cautioning sort of gold longs of these moves that I've been calling this for a bit of a turnaround. And I think the yuan plays a bigger part on those sort of other markets as a bit of a proxy than people sort of give it credit for, but it's a great indicator for it. So certainly if we see these things push up a little bit higher, I think this is going to be putting pressure on gold to be moving back down a little bit lower. Same with Aussie to be testing those lower levels. Now, till we break major levels on these things, till we sort of get a move back above here, or say you're moving back up to 728, these are the kind of times that you see possibly gold underneath 3,200 and Aussie under 63.90. But as I said yesterday, it's got all your price targets need to line up a little bit. So it needs to be your immediate price target for this chart here is obviously around 722. What's an immediate price target with gold? Well, that was back down to 3,200. We've got a reason for the market to be buying gold at 3,200. We've got a reason for the market to be selling the yuan here. Oh, well, technically buying the yuan, but selling this chart at 722, and you got a reason for the market to be buying Aussie at probably around sort of 63.50 to 63.90. All these things will happen at once. This is what cross chart confluence is. They'll all be coming into their respective sort of supports and resistance at the same time. Should this break, then most likely you're going to be seeing the break on gold of 3,200. You're going to be seeing the break of gold of silver of Aussie at 3,250. 3290, 3250, depending how fast it gets. I'd be actually, if this moves up over here, I think Aussie's going to be testing the lower levels. I don't think 3290, 6390 is going to be holding at that point. But yeah, so there we go with the charts. Gold silver ratio. Again, look, nothing super. It does look like it probably wants to break a little bit down to the downside, but again, we can slowly build this chart out. We can slowly see what they're doing with it. We did have this falling resistance. Maybe it's only on a certain time frame, but you can see that sort of certainly these are the two levels that you're kind of looking for now. Back down under here. Up over there. I think that's going to give us a little bit more direction with it all. But yeah, for the time being, maybe a move back down to sort of test 98. This probably sort of come in line with gold, sort of moving down to those 3,200 levels as well. All right, that's it from me.